Hi everyone, welcome to Market Makers. Today on the show we have Sonam Srivastava, founder of Wright Research. Sonam is considered as a trailblazer of quant investing in India, and she's the one who brought a lot of data-driven investment strategies to the forefront, especially at the time when most of us were investing using traditional methods. So welcome, Sonam.
Thanks a lot for having me.
Let's start with a rapid fire round. Ready?
Yes,
Okay. So tea or coffee?
coffee.
Most used app on your phone apart from trading related apps.
I think Twitter.
Okay. One finance book or author that you really like.
So I really like the book about Jim Simons, the man who solved the market. I think that is something that I really appreciate.
And goes with your profession as well. Your hidden talent outside of finance.
So I like to read a lot. I don't think that's a talent. I also draw and paint. I think I'm good at that.
Okay. Your favorite TV show?
My favorite TV show. So I've been watching this show called Peaky Blinders. I really liked it.
And apart from Jim Simons, which investor or trader do you admire?
So I admire a lot of these guys. I think, a lot of quants that you see, right, are role models. So the founder of AQR is a role model. I think so many interesting role models, even in India, right? I've read this book by Parag Parikh. I think he's somebody to look up to.
Interesting. And your favorite movie?
My favorite movie, I don't really watch a lot of movies. Yeah, I think
Can't think of any. No
I
problem.
can't.
So are you a night owl or a early bird?
So I used to be a night owl, but now I just wake up at 6:30.
The markets keep you awake, or maybe you rise early because of that.
Yeah, I think.
Okay. Let's say if you were not an asset manager, what profession would you choose or your career?
What profession would I choose? I would probably be doing some sort of data science, or I would doing something with data and number solving. I'm pretty sure.
Okay.
Yeah.
And investing is complete the sentence.
Investing is life right now.
Okay. So, Sonam, what drew you towards quant investing, especially when it was, relatively new in India?
No. So I've had a very interesting journey for this. But then I started my career in 2010 as a chemical engineer. Went to Reliance to do that. But fortunately for me, when I studied in IIT Kanpur, I had a lot of exposure to numerical methods and algos and all that. So I always knew I wanted to do this. So I left Reliance after a year, experimented with tech, which didn't suit me. I started studying for CFA. And then I got a chance to work with this Mumbai-based company called Forefront Capital, which was started by Radhika Gupta at that point in time. There, things clicked for me. I was working on these algos where you could see money being made immediately with the work that you did, right? So it really clicked, and I've been pursuing that for since then.
Okay, so that was your aha moment.
I think so. Yeah.
Okay. And according to you, which is the biggest, misconception people have about quant strategies?
So I think there are a lot of misconceptions. A lot of people who are new and come to us, they think that quant is going to be extremely high risk, and it's extremely risky to invest into a quant strategy. But I think relative to the traditional sort of strategies, you would typically see quants end up being slightly lower risk, right? Because of the diversification that is built into a lot of these strategies, because of different sort of focus that we have, right? So I think and see, we are doing the same thing. We're buying stock, right? We're not doing anything that could blow up, right? In that sense. So I think that is one misconception that people have.
And those type of rejections, how do you combat them?
So see, our pitch, whenever we talk to investors, we try to be highly transparent. We try to explain to them, what's inside the strategies, what we are doing, obviously, and we try to be as transparent as possible, explain the factors that go in, explain the process that goes in, and why you should rely on it, why you should trust it. I think it works many times.
Okay, maybe, educating people about how quant works.
Definitely.
Interesting. In fact, we also have a lot of educational initiatives at Upstox through Uplearn. Interesting. Now, people have been talking about lot about AI. So, how do you see AI shaping the future of quant investing? Is it exciting or concerning?
No, it is definitely exciting. What I think is that AI is going to bring us a lot more interesting data sets, right? So let's say all the news that is being published, everything that's being talked on Twitter, ChatGPT can actually go and tell me, okay, the sentiment has increased or decreased, or some red flag has been flagged somewhere or the other. So a lot of interesting data sets might come in. I think, see, for us, we use machine to trade. It's not AI, but we use systems, right? And the better those systems are, the better we would do. So if AI can help us in some parts of it, I'm very happy, right? But see, investing in markets are very wide, very noisy. It's not simple as text prediction. It is much more complex, right? So I do think it would be a journey for AI to do anything significant in this space.
And people also talk about, like, especially when we are talking about quant investing, the input, garbage in, garbage out, probably. So, have you faced any challenges in getting the right data, or any kind of mishaps that have happened in the past?
100%. So when I started 2019, sitting in my drawing room, right, I bought the cheapest data set that was there, right? I didn't have the resources to buy the most expensive data sets. And we've seen, we've evolved. Now we get very high quality data sets, but throughout the process, we've learned that, okay, suddenly my strategy are not performing. What happened? I would go and discover, okay, the data set itself was wrong. And we always love getting more and more data, the better data and more diverse data that we can get. But yeah, like you said, data is the primary commodity, right?
Interesting. So, and a final one on quant investing. Is there any room still left for intuition, or it is purely data driven?
No, I think, see, at the end of the day, Milan, for me, quant investing means that, I'm doing investing with a lot of statistical proofs and process, right? At the end of the day, uh, a lot of it, let's say, if I say that we have to do momentum investing in India, that comes from intuition, and then you experiment and find a process and, find something that works. So intuition always has a role to play, right? I'll give you another example. We had a lot of PSU stocks that we were betting on throughout the last year. After budget this time, we saw that suddenly all of them are moving in one direction down, right? And we ended up sort of, so that we realized, and then we thought that, okay, maybe we have to limit that exposure, right? To reduce risk in our strategy. And we experimented with that. We found out a proof, we back tested, and then we applied it. But that intuition had to come out from somebody who's watching the market, right? So there's always, nobody is foolproof, right? There's always room to grow. And human intuition cannot be beaten in that field.
Right. So essentially what you're saying is, even though it's quant or data driven investment, but it starts with an intuition and then you build upon that with data driven strategies.
No, it's not always my intuition. It is also, what you see and watch in the market, right? Let's say some sector or some theme that is working really well, right? So talking about our small cases, a couple of years ago, we saw that New India theme, right? Which is investing in the new manufacturing, and the PLI schemes and all that was something which was working extremely well. But, there was no quant model for it, right? So we did our research, identified companies in that space and created a strategy that is based on only that universe. And, so that ended up being a good strategy that's been doing extremely well, right?
And and how do you manage risk when you are applying this or implementing these quant strategies? How is the risk managed, and how is a portfolio protected during, in some extreme scenarios?
No, I think the risk management that we do is very similar to what a intuition-based human manager is doing, right? They will first of all try to create a diversified basket. They don't want to bet everything on, let's say, the IT sector or the banking sector. They would include a whole set of stocks. That is the first thing. Second thing is, we always try to be adaptive with the risk in the market, right? What we think works in a bear market will not work in a bull market. So we try to forecast the regimes in the market, switch our risk based on that. We would sometimes, include gold and want to reduce with ETFs to reduce our risk. And then in times of extreme risk, when you're seeing short-term corrections, we would either go to cash or sometimes hedge it, right, if possible. So a lot of risk management. I think, for people like us who are providing strategies, returns are good, but if you are not doing risk management, right, then it doesn't work for you.
Got it. And have you witnessed anything crazy in the market more recently?
Now, what was more crazy than the exit poll election and that whole phase? That was an extremely crazy. I was telling you the story, right? That we ended up sitting in a little bit of cash and hedging during the exit poll time, which was a really counterintuitive thing, right? I was feeling like a conspiracy theorist on that day because we were hedged and everybody was buying, but the next day when the market corrected, it ended up being a great call. So very eventful day, and what can be more crazy than that?
What is the one of the biggest lesson that you learned early in your career on trading?
On trading, I think, see, one big lesson that, as a quant you learn is that you have to remove all the biases from the investing, right? And the more accurate the process is in terms of your system, removing all the biases, any cracks in the thing, the better your strategy would go out in the future, right? So I think that is one big lesson. So we spend, I think, 70% of the time just fighting with the system and seeing where it could go wrong, right? I think that is one lesson that you have to learn.
And that lesson guides you at Wright Research.
100%. So we do spend a lot of time in trying to remove any sort of bias that could be there. If you could be looking at, sometimes systems can have look ahead bias. Sometimes they can have, a lot of cracks that can, end up being really bad in the live market.
Sure. And did COVID time crash affect your strategies?
No,
in a positive or a negative way?
No, COVID was very interesting time for us. So I started Wright Research 2019 July. So we were 8 months old, and we were a little bit annoyed. So when the market was correcting in February, we were again sitting in some 25% in gold and bond, etc. When the COVID crash hit, our strategy did not go down that much. So we only saw 18% correction. We were new on the small case platform that time. And seeing that we have done so well in that period, small case ended up promoting us a lot. And then the bull market started and our momentum strategy started working well. So, that risk management again at that point in time was the thing that, got us attention, right?
When you started in 2019, about 4-5 years back, could you foresee that you would be managing more than 800 crores in about 4 years?
Well, I mean, I always hope. But it's been quite a journey. I think the market has been very favorable. So a lot of luck involved instead of more than anything else.
And what are the key differences in which a quant being applied for a retail investor or for an institutional investor? Is there any difference in the way you would manage funds?
No, I don't think there's a difference in which you would manage funds. I think the approach remains the same, but I think how you talk about it differs, right? Sometimes when I'm talking to retail investors, they would probably want to know about how much returns will come out of it, or the broader direction of it, what sectors are working, and all that. When you're talking to some institutional investors, they will go deep into, they understand what you're doing. So they will start talking about your factor loadings and this and that, so I think there's a difference in how you talk to these folks. But I think at the end of the day, everybody's looking at a good strategy that can do well in riskier scenarios or in the good times, right?
But don't you think an investor would always want to ask you what exactly is your strategy? Or so are you, that transparent, or there are some black box models?
Try to actually be 100% transparent in every step that we are doing. We'll talk to them exactly what we are doing. But obviously, we're not giving out our systems. We're telling them, we are running optimization to do it. Right? So we do explain everything, because I think that is what brings the trust in, right? If they know exactly what you're doing and if that makes sense to them.
Okay. And, going just a step back, how did your, experience and learning at IIT Kanpur help you with quant investing and managing money for people? Are there any connections?
See, managing money, I don't think so. They never teach you any finance or money management in IIT. folks are still clueless there. But yeah, I think, I ended up, when I was doing chemical engineering, independently working a lot on numerical methods and optimization methods and all with the professor, with my projects and all that. I think that translated a lot to quant finance, where you have similar sort of optimization, similar sort of numerical methods. So I think there was something that I took out of it, but it wasn't finance, financial knowledge, right?
Yeah. And did you have any mentors along the way?
No, I've had amazing mentors along the way, from people at Forefront when I was working there. Then I worked at Edelweiss for 4 years. I was in the trading desk. So many smart people have helped me along. In HSBC, I had a great mentor. So there was a trader sitting in London who was from Tunisia, Mahmoud. I think he was one of the great mentors for me. He was really pushed me to pursue what I do. So I've had a couple of, even right now, I'll be very honest, even running a startup, I rely on some mentors. I go to them when I have issues, right? So I think,
And along this way, what was the most valuable advice that you received?
a valuable advice that I read recently is that, you have to be a little bit paranoid in the short term to get long-term profits. And I think the recent volatility has sort of proven that correct, right?
That's right. That's right. And as such, if you see, managing money, finance is a pretty demanding career. So, how do you unwind? What hobbies do you have outside of finance?
So I play a lot of video games on my phone. I also like to, like I said, I like to paint and do all that. So sometimes on Saturdays when I'm doing client calls, I'm either playing games or sometimes doing my painting along with that.
Okay.
I also run a lot. I do swimming on that.
Okay. And you've also been teaching quant investing. So, how is that as an experience? Does it help you to, release the stress while you're teaching and all?
No, I think, whenever we do these, we do a lot of webinars, live interaction with our clients, and the feedback that you get out of it is extremely valuable. You get to have that one-to-one connection with people who are investing, and you also get feedback from them on, what they think. I think that's extremely valuable. In terms of teaching, I've taught one course with BSc, right? BSc Institute. And I thought that was a very tough job, right? I had to do courses for them, classes for them 2 times a week. Thought, I've not done anything like that till then. Yeah.
So, you do a lot of teaching as well. So, what motivates you to teach quant investing?
No, I think, especially for the webinars, the feedback that you get from the clients and the interaction that you have where you understand what they're doing, that is very important. I think also what I see is a lot of people actually want to learn quant now in India. There's so many smart people coming from, tech background who think that, they can use their skills in this space, but there are not too many resources out there. So you see some very ready people ready to learn, and, so it's always a great thing to sort of give them that knowledge, right?
Right. So, any memorable, interactions that happened with students?
Memorable interaction with students, I think, yeah, definitely. See, when I taught a course with BSc Institute, that was one great thing. It was a very difficult thing. I was teaching two-hour classes a week. But then I think those 50, 60 folks that were there, I think there were more, but they did so much hard work in their assignments and all that. I was amazed. And then they still sort of reach out to me and call me Sonam ma'am and all that, which is amazing. Yeah.
Okay. Finally, Sonam, if you were to summarize a major life lesson in format of one tweet, what would it be?
I would say that the markets can be extremely unreliable, and they can change anytime. So if you are not planning for all the scenarios, then you would have a difficult time dealing with it, right? Not very catchy, but
it's cool. So thank you, Sonam. Thanks for taking out time for this discussion, and all the best for your small cases and PMS.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.